Hey everyone, this is the Trader Investor. In this video, we're going to go over the SPYs, where they're heading, why they're moving the way they're moving. A lot of times, markets will react and people panic, but today I will show you why we don't panic in everything that we do. We trade what we see, we don't trade what we want. So if we trade what we see, there will not be any need to panic. So starting off with the SPYs, we've had a strong push up since last week Monday, right? Monday, it seems like price was collapsing and then price just kept pushing up and up and up. And now, when we see divergence in our oscillator, what I mean by divergence in our oscillator is price is making higher highs, but our oscillator is making lower highs. We know that there is a pullback coming. We don't know when, but we just know it's coming. So that's one thing to consider. And when we are looking at that, then we're not too worried when a pullback happens like it is happening today. And so when we look at a Fibonacci retracement and we go from recent swing low to recent swing high, what we notice is that the pullback is at the 23.6% retracement. It's not a deep pullback to 38.2, 50% or even deeper than that. It is just stopping at the 23.6% retracement. One of the things that I like to do in a situation like that is take a look at the hourly chart. And when price is pulling back to the 23.6% retracement, and when price breaks some recent highs, I like to go take a long position. So I want to just position myself, wait for this to happen. Of course, if this doesn't happen, if price keeps collapsing, then we play to the downside. So that's not where we are yet. So where we are now, price is at the 23.6% retracement. So another thing to look at that is very important is on Friday, price gapped up. Thursday to Friday, price gapped up, and it left this imbalance. A gap, an imbalance was left. And what did price do today? It went right to the middle of that imbalance. So this is something that is expected, right? Gaps close, imbalances gets taken care of at least to the 50% level. And so today, when price opened below yesterday's close, and when the 50-minute range low or the low of the day was breached, and price retested that low of yesterday and did not manage to close above it on a 15-minute chart, boom, it was time to enter short position. Did I enter short position here? No, because I was doing something else. I was not monitoring the market, but I already knew this was coming. I knew this was coming, but I didn't have the opportunity to monitor the trades. What happens sometimes is we get one bar that comes here and then it reverses. So if I'm not able to monitor, I don't enter the trade, even though I know this is happening, because I'm not able to monitor. But that's okay. But at least now you know technically what to look for. Price gap down, we have this imbalance. We know price is coming down to the 50% mark of that imbalance. You can take a put position here. And price has stayed below VWAP the whole time. And now we will wait and see what is happening here. And another thing you can take a look at is when you look at the Fibonacci retracement from yesterday's last bar to today's first bar, price has gone beyond the 61.8, right? The negative 61.8% retracement. So since price has gone that far, it is likely to want to return. You shall wait and see. We want to see a break of structure. Break of structure means we have lower high, lower low. Now I want to see higher high, higher low. This is break of structure. This is an entry. We want to see this break of structure that tells us we're heading toward the 50% retracement from yesterday's last 15-minute bar high to today's first 15-minute bar low. So that's one way to anticipate and wait for that next move. Until that happens, there is no next move, because what could happen is it makes a lower high and continue down. We don't know that. So it could want to go here. It would want to go here. We are going to patiently wait. Once we miss a move, like I missed this move, miss meaning I did not want to participate without having the opportunity to look at the charts. I missed this move, therefore I'm not chasing. I'm just waiting for either another indication that this move is going to continue down or a reversal. I'm waiting for that move to happen. For continuation down, I really want to see price test the VWAP and get rejected with a pin bar. So if it gets rejected with a pin bar at VWAP, this is what I want to see, a pin bar meaning like this. If it gets rejected with an inverted hammer, inverted pin bar near VWAP, I want to consider adding to a put position to go short or wait for the reversal signal. So this is how the markets are setting up. And it's important to understand this setup. It's important not to chase. It's important to see we've had a nice move. This pullback is a healthy pullback, right? A very, very healthy pullback. Today's pullback is 1%. It's not that significant. And it could reverse back up. So we're patiently waiting. We're patiently waiting to see what happens. We're not chasing and we're not fearful. We're not chasing and we're not fearful. And if we look at the Qs have gone down deeper. They're at 2% retracement, 2% pullback from yesterday. And the Qs have actually come back to the 50% retracement. So why are the Qs coming to 50% retracement? I want to look at IWM. IWM, as our leading indicator, did not have the strong push up like SPYs and Qs and hitting all-time highs, right? IWM has been staggering. IWM has been in this consolidation here. It's been in this consolidation here. So IWM is really in consolidation, and IWM is now telling us oscillators makes lower highs as price is making higher high, or as price is flat, oscillator is making lower high. So IWM is already telling us, had already given us the indication that we were going to go down anyway. So as we wait for this, if you had the opportunity to trade today, this was a fantastic entry for you, because IWM already gave you that indication, and price broke below the 15-minute range of yesterday and heading towards the mid range of that imbalance. A $3 move, you already should have gotten a lot of money here. This is an area where if you're in front of the charts and you are not able to take this trade, we need to talk. I need to understand why you're missing this trade, because it's very, very clear that this trade is giving you this opportunity, right? Headwind here, but this headwind, again, if you look at this headwind from your entry to this headwind is $1.55. So there's no reason why you don't enter this trade. $1.55, take 50% off your position at $1 move and then let the rest ride. You're already sitting in pretty good money. If not, we need to have a conversation so I can help you understand where you're not seeing opportunities. Again, this is not a recommendation to buy or sell. I'm just saying, if your charts are telling you one thing and you're not able to take advantage of them, let me help you read the charts better. So IWM was already leading us down, therefore SPYs came down, Qs came down, of course diamonds came down. But diamonds and SPYs did not come down that much. Qs came down 50% of that retracement. And diamonds did not even come down to the 23.6% retracement. So diamonds still have room to the upside. And now that we have that room to the upside, we just patiently wait. And if you look at a daily chart, you can see lots of imbalances and order blocks sitting down, waiting to be mitigated at some point when we have a major market collapse. But when you look at trend lines, we're staying above those trend lines. So that's what markets are doing. IWM is not in a trend line. IWM is in a big consolidation. So we wait for that consolidation to be over, and markets will tell us one way or another which way they want to go. Qs, again, strong uptrend, very strong uptrend, very strong uptrend right now, extremely strong uptrend. We're continuing in this uptrend, very strong. SPYs, same thing, very strong uptrend, extremely strong uptrend. So we're continuing this uptrend. So nothing to be concerned with. A pullback is healthy. It's just an opportunity for us to enter at a lower price or sell put positions, right? Sell put positions to collect premium on a down days when we want to collect premium. This is where, for me, this is where I collected premium, is when we were down to this day. This is where I collect my premium. And I went out all the way to August so I could collect a lot of premium. Once you collect all that premium, you just wait, and at some point you can buy to close and just give back a little bit of that premium, or just wait for expiration and keep all of your premium. If price goes below your entry at expiration, that's fine, because you are willing to buy the stocks. If you're not willing to buy the stock, then collecting premium is a little bit dangerous. But for me, when I collect premium, I'm willing to buy the stocks. I just buy them at a discount. So this is how the markets are setting up. Are you taking advantage of them? Are you seeing where the markets are telling you they're heading, and are you capturing those moves? All right, everyone, take care, and I will see you in the next video.